Friday's market buy signal, individual investor sentiment, and Bitcoin's weekly technical position. I quantify it all on today's REKTelligence report. As a friendly reminder, everything in today's show is for informational purposes only. There is no investment advice given. All right, let's get into the show. Hey everyone, welcome. I'm David. This is the All Markets Report, where I quantify across asset classes with an eye to the week ahead. And last week on Friday, we finally got the breadth signal that I've been waiting for. If you've been watching recent videos, you know what I'm talking about. If you don't worry. I will review it and add a bit more context and information to that. We'll talk about investor sentiment right now. Is it at an extreme? We'll take a look. I quantify that. And then we'll move to Bitcoin. And it's in a technical position. Is it bearish, bullish? There is an answer. All that ahead. All right, considering where the stock market closed on Friday, I will start again with the stock market, and specifically this breadth metric. S&P 500 stocks above their 20 MA is finally less than or equal to 15%. You can go to the lower right-hand corner and see that we finally closed at this level, and this is the first time we've been here since the tariff tantrum, and prior to that, late 2024. So it's been a minute since we have seen breadth deteriorate to this level, which is typically bullish. Now, there is a range of extreme once you get to this level. I'm going to show you that in just a moment. First, let's review this key score. This is very important to all of my research. The REKTelligence score, it's a unified objective function, simply a fancy way of saying a way to see in one score 0 to 100, a metric that ranks profit factor, win rate, edge quality, return efficiency, which is basically how fast does capital turn over, and risk in the form of drawdown. Traders, crypto is not a wild, unruly market. It's an asset class with 500% more time for price discovery and opportunity. My new course, Crypto Trader's Edge, is now live through Algo Advantage, one of the top quant pods and academies out there. A full systematic framework, backtesting, strategy development, validation, real edges with full code, not hype. Links in the description, or head to my Substack at REKTelligence. Now back to the show. All right, I've shown this chart before, but now the condition is current, right? This breadth metric has met the less than or equal to 15% level. Average trade with the SPY with a 1 month hold is 1.89%. By the way, this is just 2007 to the present, so almost 20 years. I wish there was more data, but this is what TradingView has. And we can see 60 instances. The hit rate is a perfect 70%. 42 out of 60 have been profitable. And profit factor is solid at 2.1 and change. Nice looking equity curve. Let's look at the Qs, and we see the same 60 instances, of course. Hit rate 71.67%, profit factor 2.2. Both of those just a little bit better than the SPY. And average trade also better at 2.18%. We see the same 1 month hold, and we see the same as we did in the last chart. I didn't note it, but the same drawdown, basically, which is high 30s during the great financial crisis. So certainly when things get epically bad, like they did then, this can have a lot of drawdown. So there is certainly risk in this signal during super extremes, kind of generational extremes. REKTelligence score here for the Qs just under 50 at 49.9. I like 70 and higher for my trades. So the ETFs here, they're solid, but the individual stock signals are stronger in my view. I covered them in last week's Edge report. I'll review them briefly here before we get to sentiment and crypto. Now I've got a chart of the actual breadth metric, S&P 500 stocks above their 20 MA. And this is a daily chart, and you can see that we are now, as of Friday's close, at 12.72%. And yet, of course, this can get more extreme. That is why I'm showing this. So you have some context, especially as we talk about the stock signals next. So tariff tantrum, 1.59%. That's the level that this metric got to, right? Very extreme. 2022 bear market, 1.38%. COVID, 0.19%. Generational fear in markets and in society, quite frankly. So this can get more extreme. However, typical extremes are basically where we are now to slightly lower, kind of the high single digits, 7, 8, 9% up to, again, where we are currently. So with the potential for the market as a whole to get more extreme firmly in mind, let's quickly review these Edge Report signals I shared on Thursday. Intuit REKTelligence score 75. These are based on the S&P 500 stocks above the 20 MA falling to less than or equal to 15%. So a market signal and then a stock-driven exit using a 1-month exit or a close above a modified Bollinger Band, whichever happens first. Full details in last Thursday's video. I'll move on. Another one is Dollar Tree, DLTR. REKTelligence score 78.5, and this is a 2.67%. Average day is 7.7. Average percent per day, 0.348, and so forth. You see same exit, hit rate 81%, a little bit north of that, profit factor 2.5. Here's another one in Broadcom, REKTelligence score of 80, really solid. Average trade 3.58%, hit rate 77.7%, profit factor 3.6. And lastly, Synopsys 80.3. You see a hit rate of 83.3%, profit factor 3.6, 66 instances. Statistically significant. All of these, again, full details in last Thursday's Edge Report. I'm going to move on to sentiment. We talked about one form of sentiment, if you will, last week, which is the VIX, or the Volatility Index. So check last week's videos for that. But as of Friday's close, we are not at an extreme in the VIX. It closed at 26 and change. Most traders consider above 30 at the very least, or 40 or higher, to be where you want to see the VIX for a classic capitulation type buy signal in the market. So we are not there in terms of the volatility index. Let's now look at sentiment briefly. These are AAII sentiment readings. There's a bullish, there's a bearish, and there's a neutral sentiment reading. And if you look at the white boxes there, I would need to see the red line get a little bit higher into that white box area. Okay, I would need to see the green line get a little bit lower into the lower white box area. What do these represent? Well, the green is bullish sentiment. You can see it's declining. Sentiment is decreasing in terms of bullish sentiment. That is usually good. When traders get less bullish, that's often bullish. You can see bearish sentiment, the red line, it's rising, but it's not yet at an extreme. When traders, individual investors get super bearish, that again is bullish. So we don't quite have the spread wide enough to signal an extreme. And so we have some of the elements of a market low potentially, but we don't have all of the classic elements. Let's turn our attention to crypto, an asset class which for the most part has been quite resilient in the face of weakening equity demand. And we'll start with this weekly chart of Bitcoin. This has a standard RSI 14 period on the bottom and looks at Bitcoin RSI readings on the weekly, less than or equal to 30. Historically, these have been very good signals. I'm going to show you the stats in just a minute. We saw a signal around 2015, one in 2019. We see 2022 bear market, and we had one just recently in February last month. So you don't get a lot of these, and the numbers we'll see are compelling, but they're not statistically significant. We just don't have the data for it, but nevertheless, I think it's worth sharing. So this is a 1-year hold after Bitcoin's weekly RSI falls to the level we just talked about. And you can see there have not been many trades. There's one, again, January 2015 into January 2016, 81 and change percent. We see December 2018 to December 2019, 122 and change percent. Most recently, June of 2022 into 2023, that was 28 and change percent. And the current signal you see at top is just down 2.22%. You're going to see that same number across every slide. Let's go now to a 1.5-year hold rather than a 52-week hold. This is a 78-week hold. And the same periods of time now, you can see, or at least the same entry dates, 222%, 192%, and the most recent one, 101%. This was a 78-week hold. So obviously we're talking longer time frame here. And with a 2-year hold, same signals, or same entry dates, I should say again, 292%, 500%, and 224%. So again, we don't have significance, but we have compelling stats based on this rare condition on the weekly of Bitcoin. I'm going to wrap up with a few quick updates, the first of which is this, ADX Pop Edge. This is from my Crypto Traders Edge course, one of many edges for Bitcoin, for alts in that course, full code and more. At a sample, this has beaten Bitcoin. So the out of sample period starts January 2022. Think about that, 2022, a bear market. So that is when the out of sample period starts. That was by design to make it very hard for the development to succeed out of sample. This certainly has succeeded, again, beating Bitcoin. So this has gained out of sample 122 and change percent. Bitcoin has gained 90.99%. So they're not that far apart, but the risk is dramatically less with the edge versus Bitcoin. All right, I'm thrilled to say that my new website is live. This is tradingfromparadise.com, and you can find information on products upcoming, things that are just weeks away in development. The Strategy Analyzer app, this is great for TradingView users who want an advanced display of results, and my institutional grade scanner, the Edge Engine. Really excited about this. My setups in real time with a bunch of metrics, including my unified score, the REKTelligence score. A little bit about my story as well. More coming there. And folks, thanks again for watching today's All Markets Report. I will see you in Thursday's Edge Report. And for those updates about all of this throughout the week, check out my notes in Substack. That's where I'm very active. You can find information about my course, Crypto Traders Edge, on my website or the link to the left there. Folks, for now, trade smart, live well, and cheers from the Caribbean.